Good morning or afternoon, everyone. This is Dan Hussey with ALGODayTrader.com bringing you our London session recap for October 10th, 2013. It is currently 10:30. We're going into the London close here. Got our London settlements coming up, but the London fix rather. Let's begin with the S&P 500, probably one of the most technical charts we've been watching over the last few weeks. Stepping out to a 4-hour chart, we have rallied this year and this summer up off the 1553 daily extension long that has upside targets of the 1750s. This summer, from the summertime lows of those 53s to highs, we pulled into a full halfway back long. This full halfway back long has not hit upside targets. However, today, or yesterday rather, we were looking at the idea of and expecting the market to pull into the full halfway back long yet again, which it did at the 1640s, going down to a 30-minute chart now. Actually, let's keep this a 15-minute. But same difference. Watching our 15-minute trend down off of highs, we had a full short, went into extensions. These extensions using a 1713 anchor. Traded once, twice, 3 times to their targets. Upon reaching targets yesterday, we actually held a new extension overnight on Wednesday evening, drawn from a 1666 anchor to lows. This extension went to targets, and same anchor new low broke into the close yesterday. We went one tick into the 618 line. After breaking overnight, we pulled into an ambush long. The ambush long traded, went to its target, through its target to its secondary target, and then began extensions drawn from highs to highs. These extensions went to and through targets, and today we have been flagging and holding inside of a brand new extension long drawn from the 1666.25 anchor to highs. This extension long has upside targets of the 1679. We have seen a small reaction so far from the same anchor new low of the 1713 anchor to lows. I'm going to be putting this up as a watch because we are in longs. We have been holding longs, and we expect our longs to continue to hold through this level. But potentially after a break of the 1685s, we could get our full ambush long. Nevertheless, the S&P has been incredibly technical the last few days. Even yesterday, to the downside, we had full shorts trade to target, next in the series trade, then extensions traded once, twice, 3 times, all the way into the close. It's been a just unbelievably technical market, and this is what we've been looking for and waiting for to see, for coming out of the summer. And it's given some great opportunities in the last 24 hours to trade. Absolutely great opportunities. Alright. So we know we're in extension longs here in the S&P and looking for continued upside. We have bullish divergence today. In other words, the high in the tick is not the high in price. And we have been in pretty much in positive ticks almost the entire day. The British pound, we have continued to hold and flag the 618 line of a very large extension, 4-hour extension long. Depending on which anchor you use, the British pound has traded, excuse me for the sniffles, has traded either a 618 line or a 50% line of a 4-hour extension long. This level is actually, or in this, what we're seeing is actually very similar to what's going on in the euro, and we'll look at that next. But we are getting a reaction now off this support There was a series, or we can watch the series of shorts here that came down off the highs. They traded to target. We would expect the next in the series here for the British pound to trade all the way up into the 60-20s, this one spot 60-20. There are no extensions. There was one flagging, but that extension looks like it's about to break. So upside resistance at the 60-20s in the near term, coming up off of major support. We haven't been looking at the pound on anything less than like an hour or 4-hour time frame recently, and there's good reason for that. The euro dollar, like I said with the pound, it's there's a very similar level holding. Stepping out to your 4-hour chart, we have a let's get rid of our fibs here. We can always redraw these. So we know we're coming up off of this big 28.70 daily long. We traded the full halfway back at the 31s and took that to their targets. Technically speaking, from a 4-hour time frame, from those 31 entries to the 36 target highs, there is a 240-minute next in the series long that resides at the 33.75s. There is also, of course, always the potential that the market pulls into a 27.45 anchor, two highs, 240-minute, full halfway back at the 131.97s, 132. However, going down to an hourly chart, we have witnessed, going down to this hourly chart, and I'm just going to take this 240-minute next in the series long off the charts for a moment. Coming up off those 31s, we had extensions that traded once, twice, and then broke out of targets. We then witnessed an extension drawn from the 33.87, 33.90 anchor to highs trade to target. Same anchor, new high then, has now traded and defended a 6-to-8 line. However, the highs before the gap up to new highs is technically the anchor that is supposed to be used for the next extension. It's like they ignored this. And now same anchor, taking that anchor to highs to the tick yesterday, traded support. So just like the pound, there's two very close levels that you could be pulling for extensions. And both have traded and defended 6-to-8 lines and traded the others 50. This is to me, this is kind of important to note. Yes, just like in the pound, there is a next in the series short on the euro that has traded and gotten a reaction, but longs traded first. And we've seen now we're coming into a second test here of that area today at the 35.47s. I mean, above the 35.50s, the euro could just start a short squeeze here. But very much inside of a kind of a range right now. Either way, these are the support levels. Support has traded. If you're long the euro, we advise longs with stops below yesterday's or Wednesday's low. That's where our stop currently resides. And then we know the next support level isn't down until the 33.75s or the 32s, and then the 29s. So very clear support. And we'll see what happens over the next few sessions. But the dollar looks like it's, against most our crosses here, it looks like it's weakening. But we're in a long and free. We were able to get into the 35.17 level here. Our first targets were hit this morning at the 35.47s with an 85 stop, 34.85 stop. The pound is actually kind of squeezing a little bit here. The Aussie US dollar. Stepping out to an hourly, you really kind of let's actually go out to a 4-hour chart so we can see the extension long drawn from a 90.72 to highs here that has held at the 93 figure. Inside of this, we've broken the full short, and the market pulled into an ambush long. A little bit of a front run. It was 5 pips here, but it was a front run of a full 4-hour ambush long yesterday. Against this level, or inside of this level, we traded a full long, and that long actually traded without breaking a short. And today we have drawn from a 94.44 anchor to highs, traded an extension long to target. Now same anchor, new high here, and of course drawing up the full Globex long. So we have support now at the 94.56 and then the 95.30s, with support well below us at the 93.80s, that 84s that have already traded. So upside targets now on the Aussie dollar are a 95.30 and then a 96.37. With micro extensions in play here. So probably one of our more bullish crosses, which is why now moving on to the Aussie yen, we have seen such a tremendous squeeze in the Aussie yen, and finally through some major resistance levels. The Aussie yen has actually been pretty technical too. It's traded a series once, full halfway back here, and now we are looking for extensions drawn from the 92.40 anchor to highs here, which have already traded and gotten free and on their way to the 92, on their way to the 92, 98 or 93 targets now, as we speak actually. So extension longs drawn from the 92.40s to highs. Euro yen, it's very tough. The euro yen recently, it has just kind of squeezed. So we've been really tracking the euro yen on a 4-hour time frame. Stepping back to and to take a look at what was going on, we have coming up off of this 126.35 support. We have upside targets of the 137.35s. Inside this level, we traded a 4-hour long to target from the 26.86 to 34.96 targets. Now, entry lows to target highs, the next in the series 4-hour long has traded and is getting a reaction, and it's like inside the euro yen hasn't really cared what else was going on. It just wanted to trade its 4-hour levels and be in these really big 4-hour levels, and nothing else has really been working well for the euro yen. You can see that my case in point here for the, there's a full short that traded on the euro yen as well that got a reaction twice, and then the long has punted it up, and right now we're between this 33.30 resistance and the 31.46 support, but we're in much larger longs, we're in a larger series, and we don't anticipate this short holding. I mean, prior full 4-hour shorts got reactions too. You can see that resistance level right here on this chart at the 31.30-37 area, but they eventually broke. So we are looking for now, a continued, at least another 50 pips to the upside to retest this 33.30 resistance area, and then after that, it could just be short squeezing, which would be very beneficial for our euro US dollar position. As we are going to take a look, most of the yen crosses are, we're going to see here shortly in the dollar yen, most of the yen crosses are aligned in one direction right now. So we're not fighting that trend. The dollar yen, I'm going to step out to a 4-hour chart, and I'm going to throw up a awesome oscillator on this chart so we can take a look at a best viewable on a 30-minute chart. I want to show you guys fine, let's look at an hourly chart. There we go. Show you guys what we were looking at earlier this week. we had identified this kind of descending wedge pattern that was backed by the structure in the oscillator, this wedge structure in the oscillator. And it was actually on the break of this trend line in the oscillator that you could have started pulling longs, and everything aligns here. So we'll take a look at this on how measured moves aligning with what we're seeing in terms of like an Elliott wave pattern, and not only that, but really a pretty good reversal pattern. And before that, though, taking a step back and looking at the daily, you know, we're still looking for what is going to take us out of this otherwise very large, you know, kind of wedge we're in, this triangle, because we do have the makings for a large triangle that needs resolution. We are inside of prior highs and lows, swing highs and lows, and until we get a move out of this, we're calling it a triangle loosely, there's not much you can do, in my opinion. And, anyway, what we were watching is 3 waves down, 3 waves up, 3 waves down, 3 waves up, and a structure of 3 waves down. 1, 2, 3. And particularly in this last structure, this last consolidation pattern, was really what was important. And I'll highlight what I'm talking about so you can kind of see it on this chart. This is what we call an ending diagonal. It creates this downward sloping wedge pattern. It needs to be confirmed by RSI or oscillators, and it will look like a triangle, like a wedge too. And you need that confirmation in order to, you know, kind of correctly label it as such. But ultimately, upon the break of this trend line, and a break of what was a very clear series of shorts, actually, once, twice, third time broke, there was a great reversal setup here on the hourly that defended a 61.8 line and traded to its target. Going down to a 15-minute chart, however, we then traded a next in the series long. It's like each day traded their Globex long. The day's low to high, next in the series long. And then even today we traded that one more time. And then upon going to targets up here, next in the series. So you can see how we are just stair-stepping higher in a next in longs of the dollar yen. What's important about the highs that we just made today was they actually broke this whole swing's 61.8 line, which was a next in the series 61.8. So we had a full short here trade, and then the next in the series was actually from the highs of the ending diagonal to lows, and we actually broke those today. So if we were to pull back into a full long, it's definitely a buy, but it's not looking like that's very likely going to happen. We've already come out of the next in the series. We tested trendline resistance as support. We've created a series of longs that are holding and will anticipate continuing to hold and squeeze us out of this level, and ultimately could be the low end of what is a final wave in this 1, 2, 3, 4. This would be the 5th and final wave in a triangle. So the dollar yen, buy the dips because we're coming off the low end of the range. We have a series of longs. We're seeing shorts break. And this is the momentum that it might need to get us up and finally out of this range. Of course, we could sell off and break down through lows, but this is all about risk reward. This is trading. We're coming off the low end of a range. Now is not the time to be a seller down here. And it gave great opportunity to actually get long that we've been tracking and watching over the last 48 hours. And that was almost 200 pips below us now. Gold absolutely abysmal sideways price action. This is maybe the only market we're going to sit here and say nothing to talk about until we're above 1380 or below 1280. We've been inside of a $100 range on gold. Yes, it's definitely looking like it's under a lot of pressure. It looks like the 1280s could break, but we could see very quickly see another one of these rip your face off rallies in the direction of 1380s, particularly with the fundamental news that's out there regarding the U.S. and Yellen's supposed appointment to the Fed. She's committed to basically doing whatever it takes to prop these markets up, and that's gonna, effectively create higher inflationary pressures. And right now, you could just be seeing what we call the fundamental squeeze. Fundamentally, gold's a buy. You should be looking for, increased inflation over the next few years, continued monetary easing policies, etc., tapering, no tapering, etc., etc. And right now, that's not happening. Gold is still selling off. So, but not much to talk about. Still in this $100 range that we've been watching for a month now. Actually, just over a month. And gold's got some major levels in play. Up at the 1551s, we have this full short off of all-time highs, and then of course we have the full long off of all-time lows to highs at the 960 area. So honestly, right now it's kind of in no man's land. It's very choppy. You see that, and just wait for gold to come into or off of one of these big levels, and then position yourself and trade in it that way once there's more clarity. Gold's not going anywhere. It's been traded as a commodity since the dawn of time. Don't feel like you need to rush in today into a sideways choppy market and get yourself beat up, with major event risk looming over your head, of course. So yeah, that's about it for today. The S&Ps, of course, will be here all day, but it for our video today. The S&P actually hits its upside target here, so we're going to do same anchor, new high. This is drawn from our 1666 quarters. This is a extension long. They've traded once the target, twice the target. Now same anchor. Same anchor, new high. We have 1672.75 support now. We still have bullish divergence, which means the highs of the day are not the highs in the tick, and we're now dipping into that 1713 to lows extension short, and we're looking for a break of the 1685s. I mean, quite amazing, guys. We are now 40 handles off of yesterday's low. 40 handles. We are up 31 points, almost 2% today alone, just since the market opened. That's just incredible. And that's not even, off of our prior lows. Just longs are clearly in control here. And, yesterday, shorts were totally in control. We saw the flip, and bam, longs have been in control ever since. And, yeah, it's an absolutely beautiful technical market. So... let's see. Anything else to update here? Nope. Doesn't look like it. So have a great day, everybody, and we'll be back with you as price action develops.